What if the way you evaluate real estate deals could match the exact same story beats as The Christmas Prince or The Princess Switch, or literally any Hallmark Christmas mini small town movie, romance type of thing? Wouldn't that be awesome? Well, that's what we're going to talk about today on this Christmas episode of the Furlo Capital Real Estate Podcast, where we dive into the intricacies of passive real estate investing. Even on Christmas, you're welcome. Because our mission is to equip people to invest wisely in both properties and people so that together, walking into the new year and this holiday season, we can build wealth while improving housing. Because we're not Scrooges. I'm James, and this is my wife, Jessie.
Merry Christmas.
Yeah, like your glasses there. You got a little got a new set of readers on you there.
That's right.
For those who are listening, care to describe what it is that you're wearing?
These are very snazzy glitter Christmas tree glasses they're bedazzled.
Oh yeah, I see the bedazzle.
And has some pom-pom
Christmas
ornaments.
trees on the top. I like it.
I got some light up
Dang, you
extras just in case.
Nice,
I'm ready.
Nice. So, what do you think? Do you love Hallmark movies? Is that your jam?
Well, I don't know. I'd say that I love them, but I will watch them, and they've become kind of a Christmas tradition for our family.
Let's say hypothetically, I didn't love them a lot. Do you think you would watch them?
Probably.
I'm just trying to guess how much
I would
influence
probably watch a couple.
Okay.
Every year.
Gotcha. Yeah.
There's like the one or two that I'm like, oh yeah, that is a sweet story.
Yeah.
And I do. It's a nice put it on in the background because they are very predictable. Many of them.
Yeah.
And so it's
That's
like
actually my first point.
I don't have to pay attention.
Yeah.
I'm sure you have multiple points there, but it's like different scenes come up and you're like, oh, this is the scene where they blah blah blah.
Yeah.
Whatever. So
where it's like we're
snowball
watching,
scene.
I was just thinking that we were watching with our kids. I'm like, oh, look out, they're about to kiss, because you can just tell. We're like, look out for the snowball fight.
Right?
Here it comes.
Yeah, here it comes.
Yep.
Someone's gonna throw snow.
Oh,
at the
classic.
other.
And that is because they follow a consistent, proven structure that deliver reliable outcomes.
Yeah.
And that's exactly how you want conservative real estate deals to be.
That makes sense. You want it to be predictable. You want the same outcome.
And so every Hallmark, and I'm going to say Hallmark style movie, because clearly, like, they're on Netflix. Oh yeah, there's on Prime. Even Disney has them now. So
what would you call that? You can't. I mean, it's like tissues and Kleenex.
Yeah.
No, it's not necessarily
a
Hallmark movie.
I would say Hallmark is synonymous with a style. At this point. Yes, it was created.
But originally, it was the Hallmark Channel.
Hallmark. Yeah. What was some? It was some snarky comment where it was like, yeah, we wrote like semi-good one-liner cards, and so we decided to turn them into 2-hour movies. And I'm like, that's not nice. But every Hallmark hit does contain 4 repeatable patterns that map directly on to how great investors evaluate deals.
Okay.
Yeah, that's right. Go. I've thought about this, and so predictability, I should say, is why Hallmark movies work. Mm-hmm. And predictability is why passive investing works well as well. I got this. So great deals, they don't surprise you, right? And great sponsors don't surprise you.
Yep.
And the model works because, just the overall structure works.
Yeah.
And so let's talk about Act 1, the meet cute. First impressions of a deal. Mm-hmm. So if you think about The Princess Switch, which I'm sure you're like, oh yes, I 100% remember that one. Do you? Can you?
I remember the gist of it. I think
the name implies the big
it's
thing.
The classic like look-alike. One's a princess, one's not.
Yeah, Prince and the Pauper with Mickey Mouse.
They wish that they could experience the other's life.
Exactly. So we got Stacy
pull a switcheroo
and Margaret.
There you go. I don't remember their names. But.
What? I had to look it up, so you're good. So they meet, and there's instant interest in what's going on, but you don't know the full picture yet, and that's the excitement that you have when you first find a deal. You're like, oh, this could be it. This is interesting.
Yeah, what's going to happen?
How many times have either I or someone we know sent us a deal like, check this one out?
Right. You're like, right? Ooh.
Yeah, that's the meet
new
cute.
Shiny thing.
And so usually it's what investors, they see first. Mm-hmm. And so it might be like the teaser email that they get, or it's the big headline numbers, or they see the cash on cash projections and like, yeah. Or it's the photos of the property when it's snow covered and magical, AKA pro forma photography. And so just like in the first 5 minutes of a Christmas romance, It's easy to get swept up in it, to be like, this is it. But smart investors, they know you got to pause and ask, is this attraction or is there some substance here? Right. And so
true love.
I know exactly. So you're going to have an Act 1 checklist, and we're going to do checklists for each of them. And so for this one, like, you're going to ask, does the sponsor have a track record? That's something you care about. Are assumptions reasonable or are they aspirational? And are you drawn to the story or to the structure of the deal?
Okay.
So those are the kind of things that you're going to do. Act 1. That'd be cute. Which leads into Act 2, the conflict. Done. Which is testing out the deal's real strength.
Ooh.
Yeah.
Running the actual numbers.
The Christmas Prince. Remember that one?
No. I mean, vaguely. There's a prince, and he visits America.
Oh, you're thinking of, there's one. No. This one's actually different. It's a newspaper reporter who is told to go, like, figure out what's going on with this one prince guy. They mistake her for the nanny, and so she starts watching.
Have I not seen this?
I don't know. And we recently stopped our Netflix subscription, so you're not going to.
No. All right. Wow. Okay.
Yeah. So
she's mistaken for the. I think I've.
It's a classic mistaken identity type of thing, and you know, obviously, like they get to know each other, but then eventually they find out that she's a reporter. Oh my gosh.
Yeah.
So everything does seem perfect.
A whole setup.
Yeah. Exactly. Or Falling for Christmas. How about that one? Listeners, anyone got this? Lindsay Lohan on it. She has a little amnesia. It's classic. It's Overboard, the movie, but it's in Christmas time. And then she ends up at this little inn thing or like hotel thing. And she's helping out. And she was like this, she's like an heiress to a rich hotelier person who ultimately wants to like buy this guy's land and he can't. And she ends up working there and like falls in love with him, of course. She's got a boyfriend who's like super weird and like intentionally over the top. You don't like him. And like, he's just like, whatever. And anyways, she has amnesia.
I do remember that one. There's a different one. You said Falling for Christmas. Falling for Christmas?
Yeah.
There was a different one where a girl falls and she does get amnesia or like it's a different type of like she experiences life from a different perspective or something. And then she goes back to her almost like the family man
with Nick Cage.
Yeah, but different. It's like with a girl.
Huh. I have to have seen it.
Maybe I think I'm combining.
I don't know if that's a Christmas movie.
Three or four different Christmas movies.
I don't know. I purposely went for like the mainstream ones to try to get more people to like, I know what he's talking about.
Okay.
So anyways, there's an investment lesson here. And this is where most investors fail. They don't lean into the conflict, but professionals want to find the cracks, right? You want to figure out what's wrong with this place. What conflicts appear in deals? There might be the debt terms, right? Like only interest only versus fully amortized, or there's just CapEx assumptions. We're like, I don't know about these, or the occupancy history is a problem. Current tenant qualities maybe not great. Maybe there's some sort of sensitivity to vacancy or rent growth that doesn't make sense, or there's just the sponsor's operating margins are super lean. And so the checklist for this one, you're going to ask, what are the downside scenarios? Really good to ask.
Yes.
What happens if interest rates rise or fall? Usually just rise, another 50 to 100 basis points, something like that. What's the sponsor's plan if renovations run long or rents lag? And then what are the weak points that aren't obvious? Those kind of questions, like we got the conflict. Then we got Act 3, the moment of clarity, seeing the deal for what it really is. So I love these ones. So there's the night before Christmas.
Yes.
Yeah. Classic.
Oh, I know that
right?
one.
There's that moment when Brooke realizes that the night is legitimate. And you're like, Brooke? I'm like, yeah, I had to look these things up. And everything just snaps into place. She's like, you really are. Oh my gosh. So there's that. Or the Noel Diary. Do you know that one?
Yeah. I don't remember. I'm trying to remember that part of the movie where it all falls into place. But there's something about a diary that was left on at a property, and somehow they get connected.
Yeah, guy's dad passes away, and her mom was like his cleaner.
Yeah,
and through that they find the mom's diary.
Sure, and
they're connected into his dad, and it's got Green Arrow from Smallville, Justin Hartley. Anyways, Green Arrow in my book. Yeah. Every time I see him, I'm like, you're Green Arrow.
That's Green Arrow.
That's who you are. But anyways, yeah. It comes when, just those long buried truths surface, and they fall in love, blah, blah, blah.
Yeah.
So the investment lesson is, this is where the story reveals the truth, right? Does the deal actually pencil after all the underwriting scrutiny? Or does the sponsor demonstrate operational mastery? Or is the plan realistic given the market and the asset itself? This is where the pros, they'll decide a few things. Like they're going to be like, is it a cash flow play or an appreciation play? Very important. What's the tax efficiency? If you're not sure what that means, go listen to last week's episode. We went deep on tax efficiency, tax benefits, depreciation, all that fun jazz. Is the timeline aligned with what your goals are? Maybe you don't have the money in place, or maybe it's a short term, or they want a long term, and that's just not what your goals are. And does the sponsor communicate in a way that builds confidence? Are all great questions. So the checklist for this one: what's the margin of safety on it? Always really good to know. Does the operator have the team to execute? And does the business plan match the actual property, not the PowerPoint version? Which I've had ones where I've looked at it where I'm like, man, this does sound great on paper, but given where this place is located, like I wouldn't do this at all. Like they've got to be a C-class asset that they want to fix up to be A-class in like a B- neighborhood. It's just too much. But
which sometimes you get those Hallmark stories too that don't work out.
There you go. How about this one? So the final act. So you're going to appreciate this. So the final act is the resolution, right? Which is the legacy and long-term payoff, which I wrote literally every Hallmark ending. The small town is saved. Holiday festival is restored. The family farm is preserved, especially the family Christmas tree farm is saved. Relationships are stabilized and the future is secured. Like,
That's right.
Dude.
Happily ever after.
Happily ever after, man. Welcome to Christmas. Here we are.
Always ends well.
Yeah. So great deals. They also end the same way with clarity and confidence and long-term outcomes.
Yeah.
And so there's a bunch of long-term payoff elements. Like you get the wealth building cash flow, which is like what we're here for. You get sometimes a forced appreciation by doing value add deals, making it better. You have refinance opportunities, which is another tax efficient way or tax benefit, in addition to just other tax efficiency things like the depreciation. You get a potential step up in basis if you're doing like a 1031. You can get passive loss carry forward opportunities. Man, this is like a recap of last week, seriously. And you get hands-off wealth that compounds over decades. It's funny, we were doing a deal earlier this year, or last month. Wait, what month are we in? Earlier this month, still in December. And it was just, the ending of it was super messy. There was a whole bunch of back and forth and a bunch of changing in terms. And honestly, there was one point where I'm like, I don't even know if we're going to close this thing. We're going to have to take it back on the market. Like, this is like, it's weird. We ultimately closed and it was done. But I sent an email to our investors just kind of outlining the craziness behind everything that went on. And part of the point, I wrote it and I was like, hey, here's what you don't hear about on HGTV. And part of it was like, you don't have to worry about this. You just collect interest. You're all good. I got this for you. And I think that's part of what being a passive investor is about. It's just that hands-off wealth creation. So the ending you want most as a high net worth investor is simple. You want predictable, sustainable wealth. You don't want drama. You don't want surprises. And Hallmark endings are memorable because they're stable. And that's exactly what you want from a deal. So I had some other random thoughts to go with it, even though that felt like a really natural concluding place. It's just what the amateurs miss versus what the pros understand. So amateurs, they're the big city fiance trope, dude, which is like the falling for Christmas guy. Oh my gosh.
Yeah.
They're just too
annoying.
distracted. They're too rushed or just too self-involved
Yep.
to make it happen. So they fall for the flashy projects. These are amateurs. They don't read the operating agreement. They ignore the debt structure. They assume everything will go smoothly, or they don't pressure test the plan.
Or they force things to happen. I feel like that attitude that they have is just like,
so right.
no, this is good. Let's go. Let's do this. And it's just like, oh my gosh, just stop. Just stop being you. And that in real estate, that could be bad too. Like,
no, it's
pushing
totally
things
true.
forward.
Whereas you get the professionals who are the small town wisdom
That's right.
guys. The guy who like he is running a Christmas tree farm, or no, he's doing the what is it? He's running like a
B&B or something.
Like a B&B. No, I was thinking like a wood shop is what I was specifically thinking of. No,
right.
I remember there was some story. I can't remember now, but he was making like these lightning would strike the ground and it would create these structures.
Sweet Home Alabama.
Is that what it was?
Yeah.
Yeah. Which is another classic Hallmark movie. But it turned out like he went to business school and had all this, like he was highly accomplished and she just like totally like dismissed him because he wasn't
whatever,
listening, dude,
it's
whatever.
ridiculous.
Yeah, and it was like, no, he went back and did all this stuff, but just didn't talk about it, brag about it. It was like actually super smart at it. Like, yeah, that's what I'm talking about. He's the girl with the glasses who turns out to be beautiful at the end. Love it.
The humble genius, is that like a good characteristic?
Sure, I'll take it. Yeah, I like humble genius. So they notice the small stuff that actually matters. Like they look at the downside risk first. They evaluate the sponsor and his communication habits. They align returns with the tax strategy. They assess the operational engine behind the deal, and they trust conservative assumptions, not holiday magic. That's right. Some actionable takeaways just to round this thing out. I got 5 of them. So it's the narrative structure to evaluate deals, right? It's, do you remember what the first one was?
Predictability.
No, the narrative, act 1.
Oh.
The meet cute. There you go. Number 2 was
the conflict.
Number 3,
resolution.
clarity. And number 4 is
resolution.
There you go.
Wait, clarity?
Yeah.
Oh.
Remember, that's where she
I remember you
realizes the
calling it
night
that.
is the, that's what I called it. What did I call it that?
I don't know. Probably. Oh, yeah, I just missed it.
The moment of clarity. That was
the moment. Okay.
Yeah.
I remember like a moment happening.
A moment.
Just like,
yes.
oh, like everything is revealed. Yeah.
Yes. It becomes
The
clear.
reveal and then the
Yeah.
resolution.
Yeah, I got the MCCR. That's not really an acronym, but I guess whatever. If I were smart, I would have figured out how to make it like HALL or something. Anyways, and then you can expect Act 2 tension. I think that's an important takeaway. Like there's always going to be something wrong with it. So just expect it.
Be ready for
Be
that.
looking for it.
Yep.
If you don't find it, you haven't been looking yet. You can reward clarity over charisma. So you want someone who operates like a well-run small-town bakery. You want consistent, competent, grounded. Man, there's a lot of like bakery-related
There are bakery
Hallmark
bakery
movies where it's just like they're baking cupcakes and whatever. And
That's right.
so good. What's the one where like they do the 25 days of Christmas and each day it's like she's like making
there's a
food
different
or something, and the
treat
whole
or
town
something.
gets into it, and it turns out like it's like some dude who she's competing with or something. I don't remember.
I don't remember what the reveal is in that one.
I've seen too many of these things. You want to look for that legacy ending, right? With the tax benefits, the stable cash flow, your favorite, and just long-term holds. That all equals generational wealth, man.
There you go.
That's good. And you want to apply the Hallmark rule. If the ending feels predictable and boring, that's usually the right investment. So fun fact, I read this somewhere. No, I heard it. Someone else talking about how they read it. They were talking about the types of people who like Hallmark movies versus not. These are totally stereotypes. So like this may not be true.
James Furlo.
Yes, but
he's the one who likes
that is true.
Hallmark movies.
But what they said was that it's people whose daily life is exciting or unpredictable, typically like Hallmark movies, because it's like a mental respite from the craziness of your normal life.
Okay. It's
so,
like grounded. It's this.
And so it's
what's coming.
Exactly. Like knowing what's coming is the benefit.
Interesting.
Yes. Whereas they say if your job is predictable / boring, you tend to not be interested in Hallmark movies. Again, stereotypes, not 100% true.
Sure.
But typically,
interesting.
that tends to be true.
Yeah.
But I also think there's something there. I think this is interesting. Our daughter and I, we're totally cool with rewatching movies. But you and our son
we like new
are not.
Yeah, we want something
Which
new.
I would argue our son's average day and our daughter's average day is similar levels of chaos and boringness. But maybe it's just your perception of how it is.
Yeah, maybe so.
You know, I guess like someone like me, I mean, I thoroughly enjoyed working at Arby's. It was super fun because that's who I am. But maybe that was like, because I always found that interesting and whatever about it. Even though some people would be like, oh my gosh, that's the worst like repetitive job ever.
So
like,
boring.
But everyone was different every time. And so, but anyways, so maybe I could see that where like our daughter, she like every day to her is unique and special and different and interesting. Whereas with our son, it's like, it's just another day.
It's the same.
So he wants uniqueness. Anyways, I thought it was just kind of an interesting deal. It made me feel good. I was like, all right, I guess there's a rationale behind Hallmark movies. And I do like the predictable nature of it. I mean, we've had it. So there's sometimes like I'll have lunch because these are like hour and a half long movies. Like, so I'll go, I'll have an hour and a half long lunch. I know, perks of running your own company. I'll watch a Hallmark movie at lunchtime because typically Jesse's not into it, but I'll come across a good one, what I think is a good one, or one that I think she would like, and we'll watch it that night.
Oh, yeah.
And I will be just as enthralled that second time round. I will tear up just as much
It's so
the
true.
second time round.
I
You're
will
like,
verify
what is
that.
wrong with you? I'm like, dude, I love it. What can I say?
Yep.
It's so good. So anyways, so there it is.
There you go.
Merry Christmas. Thanks for watching, or Merry Post-Christmas. I guess, like, ideally, you're not actually listening to this podcast on Christmas Day. You're hanging out with family, I guess. But whatever. That's what we're doing. We actually are headed on an airplane. We're out of here, so we're going to record a couple shows ahead of time. So I'm not thrilled about it. Sweet. But yeah, with that, we are going to head into the new year. I'm super excited about things that are coming up. It's going to be fun. And so if you are interested in investing with us in the new year, love to check us out at furlo.com. And with that, thanks for listening. Have a great day.